All right, everyone. So it's currently 10:50 p.m. at night, and I thought this week, instead of me making a vlog, I wanted to have a bit of a sit-down talk. I've got my notepad here, my little mini journal, and I've got some notes in here. As you can probably tell by the title of this video, I wanted to share my experience, what it's been like coaching people for coming up to my 4th year. I've been trading under a decade now. So from a trader's perspective as well, and a coach's perspective, what it's taught me about human beings and what it's taught me about them when they're in the trading arena specifically. And this will apply to all of you. You know, these points that I've noted down, they're very simple. I don't want to keep you here for half an hour or longer, but they're very simple points for a reason, because these are the things that I find that are most common. And the first one is regret. Regret is such a common thing. I've worked with people who literally have put themselves into 30, 40,000 pounds worth of debt buying prop firm challenges. And no, that's not a joke. That's true stories. There's multiple people that I've worked with that have been in that situation. They've remortgaged their house, they've dug into their partner's savings just to acquire the capital to then put into prop firms to buy assessments and to basically, they didn't realize, but fluke their way to $1 million. And so people do experience that. And when I'm having that conversation there, it's not an easy conversation to have with the other person, because they almost feel like they're on the last straw and they're in a really, really dark place. Rightfully so, because they've either dug into their partner's savings, remortgaged their house, taken huge loans out, maxed out their credit cards, and put themselves into a really silly situation. And we work them obviously out of that situation in the end. It's a slow process, but it happens. So regret's a massive thing. You know, there's people that I've worked with that have come from trading so many methods where they almost feel like nothing works anymore. Like the saying goes, that people have realized that they've been drowning in knowledge but starving of wisdom, and they realize almost too late in their minds, when it's never actually too late. But this is why I come on here with so much passion and share this, because I get to experience that hands-on with people, right? And when I see the regret in their eyes, it's a horrible thing. When I hear it in their voice, it's a horrible thing, because you almost want to, you feel like you want to build a time machine to take them back so you could be there to advise them properly, so they wouldn't have to go through all of that. The thing is, though, what I've also realized, that some people have to go through that to that extent to realize the importance of listening to simple information, the importance of sticking with one individual who's teaching you and one method, and sticking by that and persisting through that. Instead of trying to try everything at once, trying to master too many things, you have to become a master of one trade, not a jack of all trades and master of none. So regret's a huge thing, hence why I said I could come on here with passion, and I tell you these things with passion because I experience it all the time with people, and I hear it from their own stories, their own voices. So regret's a huge thing. Regret for not listening properly, too much ego, and neglecting simple advice. They realize in the end that they just try to overcomplicate it. And I've got a note here that says that overcomplication is extremely common, which it is, but overcomplication is a bigger issue than misunderstanding. What do I mean by that? You'll find that the issues I face isn't really where people are like confused from a point where they don't have the knowledge. They're confused because they don't understand a certain part of the method, right? Obviously you deal with people who are like, I don't understand this, this, and this. And it's like a 3-minute conversation. I'm like, look, fix this. This is what a value area is. This is what we mean by a volume area. This is what we mean by underdeveloped structure. Like, those are simple conversations, but you'll find that that isn't really a big issue. The bigger issue is that people overcomplicate. So you'll give them simple advice. For example, today I was on a call with somebody, and this individual used to be full-time. He actually passed on our in-house fund, and then he just basically went into a break-even cycle, which is natural if it's the first time you've acquired capital. People usually tend to go straight into drawdown, which is why we tell them to minimize their monetary risk, how much they're risking per position, just to get used to it, to settle to it, or they just do the break-even cycle for a long time. Now, he eventually had to go back into work because he couldn't keep it up, and he lost his rhythm, right? So we were on a call today, and this individual's so skilled, like such high potential. I really get along with him, and he's a really good person. And we jumped on today, and I said to him, look, you just simply lost your rhythm. You've not lost your skill set, you've lost your rhythm. And he sat there and he thought, I've actually overcomplicated a lot of things that I used to keep simple. And I said, well, of course. And Mark, who's my mentor, for those of you who don't know, everything he's taught me has literally stemmed around, don't stop doing the things that got you there in the first place. You wouldn't train so hard to get into shape and then just stop training, or stop doing the things that got you in shape in the first place and expect to basically have the same results and maintain the same results. You wouldn't do that. It's the same advice that I gave him. So we put practical measures in place as to what things can he bring about to then optimize proper performance again. But like I said, overcomplication is a huge thing. I'll be sat there giving advice to somebody and saying, look, all I want you to do is getting the right state of mind before you even look at the markets in the morning. Do X, Y, and Z to do that. Very simple exercises. We've given this in our psychology program to traders as well. Do this. 2 weeks later, they stop doing it. And then 6 weeks later, they come back and think, I've not yielded the results that I want. I'm confused. And I look back and think, hold on a second, you 2 weeks in, stop doing the very things I told you to do that are going to help you get there. So you've overcomplicated the whole thing and you've stopped listening. I've had messages where people have come back and said a year later, hey, Ibi, I know it's been a long time since we spoke. I've really been in the shadows and, I've tried doing it like X, Y, and Z and I just couldn't make it work. And I've realized this whole time I've completely neglected what you said and I want to start fresh again. The amount of time, guys, I hear that story, it's so common. And of course, I'm always going to be there willing to help. The whole team is. It's the whole job with that whole reason why we're here. It's our job, okay, to help. But like I said, when I experience that so much in conversation with people, why do you think I'm not going to come on here and share this with you watching so that you don't experience the same thing? Because you're not special. You're not going to be an anomaly where you won't experience some of this to a degree, and you will. It's very, very important if you let it. So technical errors are the easiest to fix. That's another major one. Technical errors are so easy to fix. Literally one conversation, technical errors are done. I could show you so many examples. The next video I'm going to make after this is going to be more of a deeper insight into what I find. Like I've got loads of documents that I keep from coaching calls and stuff. I'll blur the names out for privacy, but I want to really show you what behind the scenes other people are going through so you can understand you're no different. You're not going to make it out luckily. Right? You're either going to experience what they're going to experience, what they have experienced, or if you've already gone through it, then you'll realize your lesson. But the thing is, you don't have to make it that difficult for yourself. Trading is going to be difficult, don't get me wrong, but it's either going to be very difficult or just difficult, and you choose what spectrum of difficulty you want by simply just dropping your ego and listening. Forget what people say out there, just listen. If it means you investing money into education and coaching, do it. See what's going to happen. If it doesn't work for you and you're not getting proper adequate coaching, great. Either find a better coach, a better teacher, a better education structure where you can learn better, or do something else then. Because I'm telling you, in trading, when you've got the correct education and you've got right coaching and you've got proper guidance, it's actually very difficult to fail. It's very difficult to fail. The reason why you're not where you want to be is because you're lacking in one of those areas. Next one. Most people aren't built for trading, but by choice. That's very, very important. I've put in brackets there, by choice, for a reason. What do I mean by that? Again, I'm giving you real life examples here. These aren't made up stories. There's another individual I coach. I won't mention his name for privacy again. And this is somebody that we jump on. There's actually two of these guys, but one of them I'm referring to. He's based in America. And what will happen is we'll jump on a call and we'll assess, right, these are the trades that you took. This is where you went right. This is where you went wrong. This is what you could have improved, what you could have refined. The first time we jumped on, there was loads to improve. He was missing loads of trades. He was completely out of rhythm. His sequence was horrible in terms of his trades. But we fixed all of that. This was I think, start of the year. And then 3 months later, he obviously every single week, the traders send me the reports, how they've done for that week. He'd just be sending his reports through. I'll be giving him thumbs up that he's doing okay. At the end of the 3 months, he'll send me his game plan and also a review for that quarter, how he's done for that quarter, how he believes he has performed, where he could have done better, etc. And it was so interesting to read because he's then picked up details. He's been tracking along where he's been going wrong, where he's been going right. Then he's created a game plan. I'll overview that game plan for him and I'll give him a thumbs up and say, right, apply this game plan over the next quarter. Now, fast forward to now, he's improved so much, he's become profitable. It's just a matter for him of missing less trades. And the only reason he's missing trades is because he's not sharp enough at certain times or he's slightly out of flow certain times. It's not a case of if he's looking at a trade and he's hesitating to take it. That's an amazing position to be in, right? So all he's got to do is stop missing trades and he's got everything else nailed down. What an amazing position to be in. He's shown himself that he can manage drawdown effectively. He's shown himself that he doesn't blow accounts. His risk management is on point. He's shown himself that he can yield good return, good healthy return. All he's got to do now is stop missing positions. And if he does that, he can be trading onwards of 250, 500k and a million. Next year, these guys that I'm mentioning, they're going to be trading multi-millions easily, for a fact. And I can say that with full conviction. And you'll hear these stories on my YouTube next year. And you'll go back to this video and you'll watch this video of what I'm talking about it now. Trust me, all right? I've not got a fortune crystal ball, but these are clear patterns in people who do well. So this individual now has improved massively. And why am I mentioning him? Because once you give them a plan, they crack on with it. He's not messaging me 2 weeks later saying, Ibi, nothing's working. He's not messaging me 1 day later saying, I'm confused. By all means, he can. It's the whole reason I'm there. But he realizes a lot of the problems that he faces, he has the capacity to fix. My job is to put the boat in the right direction, help them sail in the right direction, give them the right tools. But he's got the capacity to fix that. And he realized that's the key trait that I want to mention. These guys have self-belief. They use their mind when they're looking at their problems. They use their mind to solve these problems. They don't just look at a problem and panic and think, oh, I'm struggling with this, I'm really confused, I don't know what to do. And they panic. They don't change things constantly. He applies something for 3 months, sees if it works, okay, all the tweaks that he's made in his trading, he sees if it works, then he assesses at the end of the quarter. So he's taking it quarter by quarter, he's measuring himself quarter by quarter. Most of you swap a system every quarter. You're trading a new system every quarter. These guys are sticking at one method and measuring themselves every quarter. Now he's in a great position. This is how you attain profitability. Final point that I'm going to conclude on, again, I'm keeping this video very brief, is traders desire growth more than money. Honestly, I would put that on top of the most important takeaways I've had from coaching people. And even when I introspect and look at myself, same sort of thing. I'm sure you can say the same thing. Really think about it for a second. Do you desire money or do you desire growth? Because money for you is an indication for growth, and that's the problem. So when you're not making money in the markets, you think you're not growing. When you're not taking trades in the markets, you don't think you're growing, because you've used money as an indication or a gauge for growth, which is incorrect. What you should actually be looking at are the correct measures in your trading, such as how many trades have you taken that have met your plan. You should have an effective trading plan. Have you been able to manage risk effectively? Now, when I say risk management, I don't just mean how much you're risking on a trade. That's easy. It's not hard. You just type in a number and calculate it. I don't know how people make risk management a difficult topic. Like, just risk 1% or risk 0.5%. Why do you have to play around with numbers so much? Just risk a fixed amount. Right? It's not rocket science. But I'm referring more so to technical risk and psychological risk. So technical risk means the trades that you're taking, where are they positioned in the market? Are they positioned in an area where there's higher risk of you getting taken out? Or they're positioned in a great area where there's low risk of you getting taken out? Psychological risk can be, what frame of mind are you approaching the market with? Are you waking up in the morning and you're in a really cluttered state of mind? What's your frame of mind like? Do you even track your frame of mind? What if you've just got out of an argument? What if you've just missed multiple trades and you're now seeing other people succeed and you're getting involved in this comparison game? Do you not think that's going to affect your performance ever so slightly? In some degree whatsoever? Do you not think that you can refer back to so many trades that you've taken where you look at them thinking, I don't know why I took that trade. I don't know why I thought that trade was great in the moment. What was going on with me? This is what happens when you don't track your mind. Then you can never backtrack and refer back to, why was I thinking that way? Because that's a shadow that's going to follow you. And I'm telling you, it's going to destroy your performance completely. So I can go into this in a lot more detail, and I will do in next week's video. Let me know down below exactly if this kind of content helps you, because I'm only trying to make valuable content. I'm not into this clickbait bullshit where I'm like, this is the one thing that you need to succeed in trading, and then I give you nothing. I'm not like these muppets on YouTube that will just sell you a load of nothing on it for no reason. Like I said, YouTube's not my priority. Literally Falcon and all the traders in there are my priority. That's the main thing. I come on here whenever I can, just to make the most valuable videos I possibly can. I don't gain anything by this. I just want to share, again, what I've learned through coaching for coming up to my 4th year and trading for under 10 years now as well. Let me know what you think. Let me know if you like these videos. I'll make more of them, definitely, and in a lot more detail as well. And I hope you can take away enough from this to massively impact your trading.